There is somebody online.
Hey, coconuts. Welcome back to Weekly Market Updates with me, Rakesh.
And Anthony. No
And
Jefferson
today,
today.
no, no Jefferson today.
Jefferson today.
And today we're going to be going back to basics, right? Jefferson's not around, so we're going to keep macro for him. We're going to wait till he comes back. And we're going to talk about 3 stocks, right? What are we starting off with, Anthony?
Yeah, we are going to start off with Netflix, right? Everybody knows Netflix, so well, it's a good place to start.
Yep. And then we're going to move on to Peloton, where there's a bit of news this past few days. And I think we're going to end off with
Shopify, who we have talked about. We like it. Oh, I like the stock, so it's good.
Right. I think just as a quick disclaimer, we have covered this in our stock geek outs, I think, a few months ago, but we are going to talk about the latest market updates that has happened this past week. Of course, if you want a deeper dive, please go straight down to our stock geek outs, search for these stocks, and you can find out a bit more on their business model and so on. All right, Anthony, why don't you kick us off with Netflix?
Yeah, I mean, well, we've kind of checked this week, right? From macro making everything go down to why individual stocks are going down. But we're on trend now.
Yeah.
Everything's crashing. Netflix. That's everybody knows what Netflix is. They're a streaming company. They had earnings last week, so that wasn't too bad, to be honest. They met expectations. Despite that, they announced after hours it went down 15% overnight, right? And
Right.
the reasoning that a lot of people give is just because of stocks are forward looking, bad guidance, so people did not like it. It's down 15%. But I think maybe just to throw some numbers at you first, right? They have grown annual revenue growth 16%, operating margin down slightly 21%, all relatively decent, right? But the net subscribers, they grew 9% year on year. That's not too bad. It's kind of historical trend, right? They have 200 plus current subscribers, 200 plus million current subscribers. So it's already a huge base. What market really did not like, apparently, was the forecast, right? They forecast that in 2022, the operating margin will be lower. They will turn free cash flow positive, but margins are lower, so that's not super helpful. And also, they will have a lot slower subscriber growth. So they're only anticipating the 2.5 million subscribers, new subscribers in first quarter 2022. So that is a slowing trend, I guess, if we were to hold that as cost support.
Got it. And so can we just break it down a little bit, right? So actually, when you look at the numbers and what they presented during the earnings call was decent. They met expectation. They improved their margins. So it actually is currently looking good. So then what you're saying here is that they are performing well, right? However, they forecast less of a uptake in the next quarter. And therefore, effectively the market didn't quite like it because maybe they think that they should be doing better, or maybe they want to put their money elsewhere. Would you say so? Something like that?
I think that there's 2 things, right? One is the market might not like it because they are still techie, they are still seen as growth. If you're a growth company without growth, what are you, right? You're not that much. So it's going to go down.
Right.
That's fine. And I think this is really just ties in with all we have been talking about the last few months now, right? The general sentiment is so weak. Anything crashes the stock, right? We talked about it with DocuSign. We've talked about many stocks, that are tech related. Netflix is just the latest casualty, I think.
Got it. And they've already had massive growth, right? So we should be looking at this company towards more of growing their fundamentals. Like you mentioned, they're actually going to be FCF positive, or they have an FCF in Q1, and they expect to do that. So the fundamentals are actually getting better and better, right?
Well, I mean, yeah, but they should, right? Because it's a company, it's growing at scale. If at scale it cannot, have positive free cash flow, it cannot make a profit, then what's the point? You are Uber, right? Or you're Grab. You are right hailing with bad economics. You're just not going to make it.
Absolutely. And I mean,
Oh,
personally, I
and they
look at
raise prices,
FCF.
right? Which I'm personally heard
Oh,
about.
yes,
They
that's
raise
right.
prices, so
They did.
that's absolutely terrible. Hate the company now.
But I mean, in all fairness, like for me, I like FCFs because that shows that okay, right, the fundamentals are strong. If there's any issues, downward trends or whatever, they can actually use that free cash flow as a margin, right, as a safety net. And
Yep.
it could even create different ways for you to try and pivot or expand into a different region, like Netflix. I mean, as we all know, started off with CDs, physical CDs using the post, and then now moved to digital subscription. And now with the
Mhm.
fundamentals of FCF, they can now look at a new segment or a new industry to try and focus on, right?
Well, yes and no. I mean, they could always borrow to buy, or do dilutive acquisitions to buy by exchanging shares. So there's many ways of looking at it, but I completely agree with you. In this current scenario, if you are reaching scale and you don't have positive free cash flow, it's not a good sign for your
Mm,
company, right? You are no longer a company that's growing 30, 40, 50% a year. You are growing what, 16? I mean, it's great, good
yes.
growth, but it's no longer that fantastic for you to justify that 40, 50 price to sales, right? You need to be a bit more
Ratio, yeah.
mature, I would say.
Got it. And maybe you can tell us a bit more, right, as we move towards the tail end of this conversation, is what does it mean for our portfolio, right? When as you think, or as we've seen here, the market wants growth stocks, and maybe they want to funnel
Mhm.
this money somewhere else, right? So again, this conjecture on my side that they think that there could be better growth in 2022 Q1 if they don't put it in Netflix. So for someone that has Netflix in their portfolio right now, how do you what is the sort of play we could do with this?
I think that there's two
Or what
points,
would you
right?
do?
So if you already have Netflix, you are down so much. Why bother? I mean, selling at this point in time, unless you need cash, selling at this point in time doesn't make sense, right? I mean, yes,
Mhm.
I'm slightly negative on it. I think that there's a bit more to prove as they mature, because as they try to mature, and they get the economics up to speed. But at the end of the day, when we talk about streaming, is it going to be an ongoing trend? Yes. Is the TAM huge? Yes. Are
Yeah.
Is the management good? Yes, they have really been executing well. They are still the market leader. There's still a bit of a moat in terms of network effects. So yeah, it's a good company, right? It's just valuation, I think, coming down to slightly more realistic standards. And if they can continue executing, if they can do the growth, I mean, all these are open question marks, but if they can do it in 5, 6 years time, they could be a much bigger market leader, right? So now they are market leader of a decently sized market that's expanding. But so long as they keep their market share, the market continues expanding, they are going to do fantastic, right? So I mean, again, not financial advice. Depends on why you bought it. But if you bought it because it's a good story stock, I think the story is still valid, right? That it's just maybe a bit more of, some new question marks that we can only address with time.
Yeah, fair enough. And I do know that they are also trying to pivot to gaming as well, right? Have you noticed on your Netflix app they have like this sort of app games that you can use and then I think right in the front they'll say no extra charge. It's all part of your
Yes,
subscription.
they should have bought Activision instead of Microsoft. We didn't talk about that last week, but I think, yeah, it's very possible, right? They expressed an interest in gaming. I mean, and with the Activision acquisition, actually, that there's so much talk about consolidation in the gaming market. So M&A is
Mm,
coming up, I would say. Whether Netflix is going to take part in it, how they view games, right? I think that's still a horribly big question mark, right? But I think they do definitely have the ability to carry it out, and just to acquire somebody, if not develop it in house. And that's optionality. That to me is nothing major, or nothing that would really impact assessment of the company at this stage. It's just something they could do.
got it. I mean, and I think last point I just want to bring up, right? And I don't know whether we should be talking about it, but we should be talking about their competitors, right? For example, Disney. Um, and I mean that's obviously the first name that comes to my mind when I think Netflix. The
Yep.
other one is Disney, right? Not really Amazon Prime, even though they bought MGM Grand and all of that. But so Disney for me would be their direct competitor. And I was reading some
Hmm.
news that they see that Disney sees that they want to really grow this cloud subscription based Disney Plus in 2022. Do you think that could have some sort of an effect? Not really.
Well, again, yes and no. I think competition is decent, right? Disney is definitely a competitor. Amazon Prime is a competitor. I should know more subscription
HBO,
streaming services.
I think
HBO, yes,
there's a
I
whole
do have
ton.
all of
There's
them.
a whole
I just
okay.
cannot forget. But again, you can have more than one, right? You don't have one. It's like credit cards. You can have a few credit cards with different banks. You don't have one subscription and you stop. Unlike, let's say, I don't even know what, GrabFood Premium, maybe, right? I don't know.
Right.
But that's slightly besides the point. It's still a growing market. I think competition might take into that market share, but it's unlikely, right? I mean, honestly, I think Netflix has the best UI. They have the best UX, right? Somehow the other competitors can't copy it for whatever God knows what reason, and at the end of the day, they are building up content, right? I think this is the if I were a Netflix shareholder, this is the scary part for me. There's this whole war over content that's going on right now. Everybody's pumping money into it, right?
Yes.
You can't. It's just investment after investment after investment. It has to happen year after year. If your subscriber base isn't growing, your revenue base isn't growing, sooner or later you'll run out of cash, right? And this is where I think Disney has a slightly better strategic advantage in the sense that they have their parks, they have all the other businesses, their licensing of their IP to provide the cash flow so that they can do the investment in the content, right? And that's I think a slight difference. So that, I mean, Disney, I prefer Netflix as a streaming service, but if you're just comparing apples to apples, Disney, I think because of their other free cash flow and their other businesses might actually be something that's more interesting to look out for, right? Because if those businesses are hugely profitable, so they can just keep spending money into the streaming content wars.
Absolutely, yeah. And they already have all the infrastructure built, right, to create more content.
Yeah.
I think one thing that Netflix does well is the cross-country shows. So, for example, Squid Game is a very good one, right? What is it, La Casa de Papel or Money Heist is another good
Money
one.
Heist,
I think
fantastic. Love that show.
Yeah, exactly. Right now they're trying to show, I think, Silent Sea from Korea. There's a whole ton coming out of the whole world, right? They have also Mexican Narcos, I think, right? Where they actually send people into Mexico. So it's really across the world. And this, for me, is a unique selling for Netflix that I feel no other subscription service has, which would keep me retaining or continuing to subscribe to their service.
Yeah, definitely. I think they do localization well, and they bring the local shows global, right? Which is fantastic. Absolutely. I mean, did you watch Singles Inferno?
Okay, in all fairness, right? I think that our listeners here, coconuts here, will hate me, but I watched the first one and found it too slow, so I stopped.
It's okay. I mean, we all know why we are watching it, so it's fine.
Right. Yes. Cool. Yeah, I think if you have nothing to add, I'd like to move on. Actually, talk a bit about Peloton.
That's all for Netflix. Why don't we go to Peloton?
Nice. All right. Well, Peloton has been a downward trend in all fairness in the past few months. I think even with the SGO, you should go ahead and listen to it, coconuts. But this past week they've had earnings call, right? And maybe I can just tell a little bit of what happened during that time.
Oh, they had earnings
call. They had earnings. Yes, they had an earnings call. Cool. And they actually. Okay, so one of the things with the earnings call is that they added fewer subscribers than expected, right? So they didn't hit their targets. So that was one negative thing. However, they focused. Yes. No, I thought Netflix was expected, but their forecast was the issue.
Yeah, expected. Yeah. This one, even the past they couldn't hit. That's terrible.
Yes, correct. Even the Met couldn't hit, right? And it's actually the complete opposite, because in their forecast, they're saying everything is going to be great. That is effectively what they forecasted for 2022. And what they have actually said as well is that they are relooking at the whole structure of how Peloton is run and looking to cut costs and therefore increase rev. This is effectively,
Ah,
some things that they said in earnings call,
oh,
and really
oh,
look
right.
at
They
how
were hiring
Peloton is being
McKinsey
sold.
or something like that, right?
Yeah, yeah, as a
Cool.
consultancy
Yeah, they're
and all of
spending
that,
money
right?
to save money. Love it.
Yeah. To a consultancy, right? Yes.
Yes.
Great. And however, right, we I think one thing that I want to note here is that there was an employee memo that went public on Thursday,
Mhm.
which was also actually the day of their earnings call. This employee memo, right, says that Peloton is halting production of bikes and treadmills, as well as consider layoffs,
Okay.
right? And this could
That
also,
doesn't sound good.
yes, it doesn't, right? It was an employee memo that went down, and that actually saw the price tank from 32 to 23, right? Within I think a day. It was insane. Then the CEO came back and said, no, these are all false rumors, that nothing happens. And then it bounced back up. Right. So it's honestly, I don't know what's happening in that company right now. But we have these employee memos that's coming through. And then we have the CEO trying to say, no, that's not happening. But we are relooking at our business model and trying to close down stores. And I believe they're trying to go for more e-commerce. One of the things that they have done is raise their price of the bikes and treadmills, right?
Wait, didn't
Mainly
they just
because,
cut them like last quarter?
yeah, they raised it back up because now they're including shipping fee, assembling fee, the whole works.
Oh, come on,
So
what are they doing?
yes, exactly my point. They're cutting, they're increasing, they're hiring a consultancy to do something for them. Employee memos are going out talking about layoffs. So I'm not too sure what's happening inside. I don't know where the proper news is, but all I know is it is in shambles. It's really what I feel from the outside, right? They don't necessarily know what they're doing. They're trying something to try and make it work. They
Yep.
were market movers, if I'm not mistaken, right? In this bike treadmill space and the
Mm.
subscription space. And that's actually really, really good. But
Yep.
they have lost, for me, they've lost that track. And mainly also because there are tons of competitors out there. And I read a memo early
Mm-hmm.
today, just before we recorded, saying that some of the investors and some of the shareholders want to oust the CEO because
Okay.
apparently for
Fair
misuse,
enough.
he doesn't know where the company direction is, etc.,
Yeah.
etc. And last thing to note, right? And I read this somewhere, so again, right, listeners out there, this is what I read, but please correct me if I'm wrong. But that the CEO, together with a few execs, sold their shares before the earnings call, right?
Wait,
So
they can't do that unless it's pre-planned.
maybe it was pre-planned. I'm not entirely
Yeah,
sure,
so
but
sorry.
they
I
sold.
think
Yeah,
just maybe to put a bit of a point on this before people start
yeah,
screaming insider trading, because we don't want to
right.
make defamatory allegations,
Yes,
right?
of course not. Yes, yeah.
Most companies tend to have a blackout period before earnings naturally, right? And how these stock sales tend to occur is, well, they essentially file a plan like a few months in advance saying that we will sell this number of shares at a certain date if a certain condition occurs, right? So it could be pre-planned. I mean, there's lots of ways to game it, right? So not saying that it's not a big sign, but I think let's just be a bit more circumspect, right? I mean, and obviously insider selling, some people say that it's not a big indicator of anything. Fair enough, because you can sell for
Mm,
many reasons. But if people keep selling, they can't need that many houses, right? So there
yeah,
is a bit of a side. Oh, and if everybody sells at the same time, well, not everybody that wants to buy houses. So I think that taken together can be a bit more of a signal, right? It's just the loss in
right.
confidence.
Yes, absolutely. The loss in confidence. Apologies if I said something wrong there, but yeah, it's probably pre-planned. You're right, Anthony. Thanks for correcting me there. But it was just when I read the news, I was like, "Whoa, what's happening?"
Yeah,
Um,
it's
so yeah,
insane.
that's effectively what happened this last few days actually with Peloton, right? It's a massive mess. I do like their subscription model. I do like the idea of that subscription model, and I think that's something that they should be focusing on more than maybe
Mhm.
even the hardware. So obviously, look at the operation margins and so on and so forth. I think they should be closing down all their stores, right? One of the things that they said
Yeah,
during the earnings call was that they didn't expect COVID to take such a hit so quickly, especially when there was blackouts and people didn't go to their stores and so on and so
yeah.
forth. So they were bleeding quite a bit.
But that's hilarious, right? Because their entire model benefited from COVID. Without COVID, they would never have got such huge growth. People would have been stuck at home.
Absolutely.
They were a beneficiary of it. I mean, come on, right? To say
I don't know.
now, 2 years after the fact that, oh yeah, sorry, we didn't expect stores to be closed, and therefore, we incurred more costs than we expected.
Yes.
I
So
don't
I
know.
think
I'm
for those out
disappointed.
there, I think for those out there, this is going to be, I think, a bumpy ride for the next, 2 months, 3 months, depending on how this whole CEO thing plays out. Confidence has to be coming back into Peloton,
Mhm.
and into the company. But at the same time, are they, they were market leaders in terms of subscription
Yep.
based fitness, but now there's so many out there, right? You've got the YouTube fitness guys that effectively created their own app, and you can subscribe to them now,
Mhm.
right? You have gyms as well that also have an online system, so you can subscribe to a gym and not go to the gym, and you subscribe on the app, right, as a
Oh,
subscription,
okay.
right? And
Oh
Apple
yeah, yeah,
obviously
yeah.
used to be, right? Yes.
Yes.
Then also in Apple Fitness, you have that as well, right? It just started with the Apple Watch. You get, I think, 6 months free or 3 months free, and they're really looking to grow
Mhm.
that area of things. And I think last
Okay.
but not least, they also have an online personal trainer now. So you effectively
Wait,
put your
Apple
phone there.
Fitness.
No, not Apple. Just as a competitor.
Ah, okay.
What they do is they have an online personal trainer, and gyms actually have that. Or if you're your own personal
Yep.
trainer, you can subscribe to them, and they will actually be there as you do like the lifts and so on and so forth, which I think is
Okay,
really
okay.
cool.
That's
But
quite
these
cool.
are all the
Um,
yeah, these are all the
yeah,
other business models that are happening in this space, right? So is Peloton subscription really going to thrive through all of that? Is a question I have.
yeah. I don't know, right? I mean, my impression. I've never taken a Peloton class. Thankfully, my impression of it was always that it was like the selling point was the ability to build that community, right? Like the
Hmm.
class teachers would know your name. You could track very well, even though it's remote. You can kind of get a sense of camaraderie. It's like you going to your F45 class, right? Which I know you just started.
Yes, I just
That's
started.
that whole sense of community, that whole CrossFit thing brought home into an app onto a bike. I thought that was a selling point. And I
Mm,
don't think that has changed, right? And I don't think a lot of the competitors actually can recreate that experience as well, right? At least to the level that Peloton can. So if that's true, and that's the core, that's correct, maybe there's a turnaround story here, right? They have a good product. They can keep selling that product. They just need to figure out everything else around it, which is currently, I guess, kind of crap.
yes, absolutely. I was just shocked with the news, and I thought I'd share it with the listeners as well.
Yeah. What about you?
Cool.
I mean, cheap enough to
Mm.
buy? No.
Oh, that's a good question. For me, it's a no. All right. Number one, I have no idea what's going to happen, because if there is an
Mhm.
ousting, or if there is a vote of no confidence in the execs, then I would expect it to drop some more. Whether it's
I
a
thought
good
it's the other
price
way. They
now.
increase, right? Because the
Oh,
drag on the
true.
business is gone,
Yeah.
right?
True.
Nobody likes him now.
True.
Yeah,
True.
him
That's
staying
why
on
it's
makes it go
gone.
down.
That's a good point. Nah, I mean, I'm going to look at it. It's already, so I've actually
Mhm.
put that in my stock list, but I'm going to look at it
Okay.
to see whether, because I need to see how they're pivoting and what they're pivoting to, right? If they are
Yep.
going to restructure the company. And for me,
Mm.
I don't want to risk it before, because I don't fully understand and trust them just yet.
Yeah. Fair enough. Fair enough.
Yeah.
Yeah, I think to me, this is just a lost cause. I don't
Yeah.
even want to look at it anymore. I'll just read the news. I'll ask you to update me.
Sure. No problem. No problem. Oh man, that was a good one. Let's move on to Shopify. Tell us what's happened, Anthony.
Yeah. Well, Shopify, again, lots of coverage we've done before. I like talking my book. I'm sorry. But I mean, I just read
All
the news
right.
of
Okay.
share, right? So, so that's it. I think similarly, I think slightly to Peloton, just a bit of seesawing news that I think last week, if I'm not wrong, that there was this
Mm,
report that came out, Business Insider. They said, oh yeah, Shopify, they're terminating or reducing contracts with their warehouses. You know, that means that kind of means that they're cutting their fulfillment network down. And well, they're e-commerce company, right? So e-commerce without fulfillment isn't great, apparently. So the share price went down 13%. On a bad day. It was a bad day for
Right.
markets generally. Yesterday,
Got it.
Monday, right? Yesterday when we were recording this, Shopify came out with a statement and said, yes, we acknowledge we are making changes to our fulfillment network, how we structure it, but really all these terminations will have no impact. We will still fulfill. We are still looking at our 2-day delivery timings and keeping that up, and we don't see an impact on our merchants at this stage. We will tell you more at our earnings call coming up soon, which I guess we'll cover it again, and
Right.
the stock went up 7%. So, seesawing, right? It's just a sign of the volatility in the market. A single bad news sends it down. A single not bad news sends it back up, which is fun. If you like roller coasters.
Wow. Yeah. So the fulfillment news that came out actually wasn't from Shopify, was it? It was from just
No, it was just like
articles.
some report, yeah, that said, oh yes, we have noticed this, or we caught wind of this, and this is what is happening.
Wow. What's happening to the seesaws, right? I mean, that's insane.
Yeah, and
Okay.
I mean,
Wow.
I don't know, right? I don't know. This is mad.
Trying to digest this. So effectively, somehow, some effectively got fake news, well, according to
Well,
Shopify,
I mean, it's
whether
real
that's
news. They
true or
are
not.
terminating it. Yeah.
So they are, but then it got perceived to be not going to fulfill. But actually,
No,
it's
sorry.
nothing to do with the fulfillment. Is that right?
Oh, no, so it's real news. They are terminating some of their fulfillment partners, but Shopify is saying that even if we terminate them, it's okay. We have other plans coming up. Nobody will be affected.
Got it.
Yeah.
Got it. Okay. So therefore, you could also say that maybe Shopify could have done a better job in PR and maybe communicating that to the market,
Yeah,
or not
well,
really.
people could have just waited 2 weeks for
For
earnings to
earnings
come
call.
out, and then yeah, and they'll say it anyway, right?
Yes,
Like
true.
it's always slightly bad form, I think, to put big news before your earnings, because then why are you going to talk about your earnings? Nothing, right? You're just wasting everybody's
Yeah.
time.
Everyone will just ask you about that news.
Exactly. You need to spring a surprise on everyone by releasing it on the day itself.
Yeah. And maybe if you can tell us how this fulfillment works. So Shopify wants to own fulfillment, right? Is that right?
Well, yes and no again. I love saying that. So Shopify,
Yeah.
if you have
Such a
heard
lawyer
our Stock
answer,
Geek
man.
episode,
Honestly.
yeah, I know. Well, I mean, if you have heard our Stock Geek episode, which you should, it was actually relatively interesting. Shopify is a platform company, right? They
Mhm.
essentially allow individuals or mom and pops or bigger corporates to set up an online shopfront, right? They're a platform, and
Yep.
I guess part of the services they wanted to add onto their platform was fulfillment. So instead of only just selling your goods, you could, as part of the ecosystem, you could also fulfill the delivery of your goods by their fulfillment network, right? And Shopify,
Mm,
slightly differently from Amazon, they did not build their own logistics. They didn't buy trucks, they didn't buy warehouses, they just have subcontractors. So it's like, oh yeah,
got
we
it.
like these people, we like FedEx, we like UPS, we'll just subcontract it to them. We like Ninja Van, whatever, right? So
Right.
that's their business model. Honestly, I think really it's a really, really small part of their business. So, their big announcement, and this was way back in 2019, was this to say, oh, guys, we are going to have a fulfillment network. We are going to invest $1 billion in this over 5 years. Sounds
Mhm.
big, right? It sounds like a decent
Wow.
number, good
Yes.
chunk of change. Yeah, 1 billion over 5 years.
Absolutely.
Well, Amazon, from 2020, so that's 2 years, has spent 74 billion on logistics and fulfillment.
Wow.
Right, the scale is just insane, right?
Wow.
And Shopify isn't a small e-commerce company,
No,
so
it's
bullish Amazon,
big.
but
It's
yeah,
massive.
it's huge. So I mean, just looking at size, just looking at scale, you can kind of sense the priority this has for Shopify, right? It's nice.
Mm,
It's nice to have. It's not a key driver of their business.
got it. And yet the causality here is that it dropped stock price.
Yeah.
even if it's
I
not
think
that
I think people are being silly.
right.
And I
Okay.
mean, look, I think it's just a very nice comparator, right? You have Shopify, the whole narrative of arming the rebels, going up against
Rebels.
Amazon, fighting their dominance. And well, what has Amazon been doing, right? Amazon has a marketplace, they are doing fulfillment, they're doing logistics. So
Mm,
Shopify, you're their competitor. Shouldn't you do the same? Right? You should also go do logistics, right? Not But I think that kind of misses the forest for the trees, right? Because at the end of the day, you know, Shopify has a very different business model from Amazon, right? We didn't cover this in Stocky Cow, so I can say it.
go for it.
At the end of the day, they are a platform. They have much better. They have much better margins, right? They are a
Hmm,
software seller in essence, right? They
absolutely.
do very little first party. They want to build an ecosystem for merchants, so they make it easy to sell. They provide financing, they provide all of that, which Amazon doesn't really put an effort into, right? Amazon wants to buy your goods, white label them, and then sell them themselves, right?
Yeah.
And you can see this in the different margins, right? Like Shopify has operating margin of 12%, decent, not great margins for a pure software company, but decent enough for a
Hmm.
retailer, right? Amazon, even with AWS, which is like huge 20+% operating margins, to average it out, comes out at 6, right? So
Okay.
so
So
there
they're
there is
really
a
spending a
difference,
lot of
right?
money here. Yeah.
Yeah, they're and structurally the businesses are just different, right? Logistics is a low margin, high volume business.
Absolutely.
Shopify not going in too much into it. I'm fine, right? As a small shareholder of Shopify, I'm fine with it.
So take us through that, right? So obviously you're talking about your book here.
Yep.
Um, and from your tone and all that, you're still bullish on Shopify. You think that they're still going to do well. Maybe tell us a bit more there.
Yeah, I think they have been growing, well, kind of gangbusters, right? I mean,
Mm,
2019 to 2020 revenue growth was like 100%, right? Of billions. So it was already a decent size. It grew 100%. Growth slowed last. No, the estimated growth for 2021, we'll know next week or next week, is a lot slower. It's mere 49, 50%. So,
okay.
still great growth, good
Yeah.
margins. They are
Yeah.
profitable. They are free cash flow positive, and
Oh, I
unlike
like that.
Netflix,
You know, I like that.
yeah, I like that. Right, it's like the first thing I look out for. Do
Yes,
they make money?
totally.
Yes, very good. And their margins are decent, and at the end of the day, I mean, we talked a bit about Netflix and Peloton just now, and we had so many question marks about their business model, right? But we
Mm,
know e-commerce works. We know Amazon works. They make money. Baba makes money. JD makes money. E-commerce as a business is kind of like a trivial problem, right? People know that at scale they can make money. It's just getting to scale that's the issue. So yeah, I think it's kind of de-risked quite a bit.
okay.
Because the business model, everybody knows how the flywheel works. Everybody can build towards it. Yeah, it's easy. Oh, not easy, but I mean it's hard to do it. But it's easy for me to say that. Oh yeah, this looks fine. I can buy into the story quite readily, and if it can continue growing, I think that's great.
Nice. So let me throw you a curveball or a spanner, right? So if
Yep.
I can take this a little bit back, and you said Shopify has earnings call in 2 weeks. So say
Yeah.
they meet expectations, so they have really good numbers for Q4. Awesome, awesome, awesome. What do you think? In again, this is just conjecture. What do you think Q1 forecasting is going to be? Should it be about the same? Should it decrease? And the reason I'm asking is just like what happened with Netflix,
Mhm.
could that also happen with Shopify? So if their Q1 figures aren't as growthy, if I can use that
Yes.
word,
Yes.
as
Yes.
Q4, do you expect just like Netflix to go down a bit, being a software
Yes.
business, or do you think
Go
it's
down a
completely
lot.
different in the
Please go
industry?
down a lot. I think this is the play for tech growth earnings calls now. Just buy like a day before, buy a put option like
Right.
10% below the price 2 days before. More likely than not you'll make money, right? Not financial advice. Please don't do it. I myself don't do it because it's insanely risky. It's literally a gamble, right? So I
Right.
can't put real money into it. But yeah, I mean, there was I mean, you saw in the Telegram group, right? This guy made 800K from playing Netflix earnings, right? One put option. Oh, sorry, one position, right? Turned 30K
One
into
position.
800K, right? that's insane.
Got
Overnight.
it.
This is better than
Wow.
crypto. Crypto still takes like 2 weeks.
Oh man. So you wanted to go down then, Anthony? Hmm?
Yeah, I think, look, at the end of the day, I'm longer term, right? And I think it's a good business. I think it's a business that can continue growing, right? And so yeah, if it comes out cheaper and I can buy it at a cheaper rate, and while still while still being able to believe that it can grow, why not,
Mm,
right? I think that's my attitude towards like the whole tech
most of it.
carnage right now. It's like I like these companies and they are decently cheap right now. Hooray, time to buy.
Yes, that's true. I do look at FCF. I do look at a few other things as well. But I first thing I go to in my balance sheet or in my P&L in the actual financials is scroll down to free cash flow and find out what that figure is. So
Yep. And hopefully it's
ah,
positive and growing, right? It's like, oh, fantastic.
yes, absolutely.
I mean, we have given up on profits, right? We no
It's
longer, it's like, everybody's pre-profit. They have to be post-revenue, but hopefully they're also positive free cash flow.
absolutely. Cool. Well, thanks so much for that, Anthony. I think this was a good session. Good to go back to basics, really.
Yeah.
With the three stocks. Again, to our
we
coconuts
can
out
we
there.
can we can look exactly at why each stock goes down, but I mean, realistically, and I suspect, and I think you would suspect and agree too, why it's gone down so much for all these things. It's really just the current market sentiment and macro, right? I mean, if we
Absolutely.
rewind 1 year and the same news about Peloton on Netflix came out, it'll be fine. It will still go up, right?
I would
It's
say
just the
so.
whole market
Yes.
sentiment has soured. So
Yes. And unfortunately, we're going to
time
see
to
that until what Jeff said, until the Fed actually starts, until the Fed actually starts increasing rates, right?
yeah, as they signal, right? Because if they increase by 0.5, again, there'll be another drawdown. It's just insane. That there's like the Fed needs to make up their mind, and people need to stop second guessing them.
Fair enough. We do actually have a question, I think, before we end off from
Oh,
one of our listeners. I'll just read that out. So Nirav
yep.
actually says there are some market watchers who say that tech stocks have been overpriced for a while and a correction was long overdue. Do you expect the tech stocks to go back to their high prices in the last few months, or do you think they'll remain at the current or lower prices in the near future?
Okay.
It's a
You want to
tough
take
one.
that?
Anthony? No, you can take it. You go for it.
Yeah, I think short term being 3 to 6 months, no question, they will not go higher, right? Peloton's never not going to go back to 170, which was where they were a year back from the 23, right? If they did, and that's
Understood.
6 times, I think that'll be fantastic. I'm not invested, so I don't care. But I think that's like
Right.
wow. I think low near future, the macro overhang will be there. In fact,
Mm,
we are beginning to see, and we spoke about this, I think, a month ago. The indices are cracking, right? Your FANG is also going down. It's not just big tech. It's not just small tech or high beta tech anymore. Big tech is also
absolutely.
mega tech is going down. So I think this is kind of the beginning of the end in that sense, right? Once the biggest ones go down and they begin to start recovering, then you can kind of go, oh yeah, no, we are slightly out of the woods. It is time to scale in a bit faster if you are not already fully, if your positions are not full. So yes, definitely overvalued. We have also said that many times, about Rivian, about Amplitude. For me, not for you.
Most of the growth stocks.
Most of the growth stocks, it's
Yes.
just been insane. We have said it's insane. We don't know how long it can continue, and now we are saying that, oh yeah, I think at least it's not going to go back up anytime quickly, but it could, right? And that's the gist of where we come from. Or at least that's where I come from, right? I want to be in this for the next 3 to 5 years. I want good businesses that are growing, that can grow and scale well, and can operate well. And when the market turns, when the sentiment turns again, because it will, right? When people become optimistic again, then that's where these businesses who will become the next generation of leaders, and they will rise up. So now it's just a preparatory phase, I think.
Got it. So to summarize, and I think for me as well, is you really got to look at your timeline, right? If your timeline is 2 months, 3 months, 4 months, I wouldn't put my bets here. But you probably could find something somewhere. I'm not too sure where, but something a
Singapore.
bit better. and but if you're looking at 1, 2, 3 years, this is effectively cyclical, right? When the interest rate goes up, we'll see what happens. Right? For me, I'm really just waiting for that as the Fed increases the rates, and any other market sentiments that may happen. And it's just like if you look at '08, just like if you look at the different cycles, you will see it go up to higher than it was even before. So I think really, really depends on the time frame. Thanks for that, Narev.
Cool. We got a
Cool. I
question.
think we did, yes. And I think that comes to the end of our live market updates. Thanks so much for listening, Coconuts, and thanks, Anthony, of course, for joining me in this banter.
Yeah. Always, right? Always highlight of my week.
Perfect. And of course, last but not least, if you haven't signed up on Telegram, please do so. We're looking to give giveaways. So go ahead and do that. You can find us at the Financial Coconut. Any questions you have with regards to our market updates, or you want us to cover anything with regards to a deep dive of a stock, please let us know. We're more than happy to deep dive that for you. All right. Well, signing off here with Rakesh and Anthony, and we'll see you next week. Bye.
All right. See you guys. Bye.